General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's finish the work. Yeah, that closes out the line. Bitcoin at 77. Yeah, I'm pretty sure. Let's go. I need Market Watch. Make sure this is week 1. 2, 3, perfect. February environment primary decline window begins mid-February. NQ mean reversion dominates. Trend days are rarer. SPY pullbacks more likely to continue then bounce cleanly. Your focus, protect downs, favor phase head extreme, and don't overcommit to directional bias. Ticker, let me get 13 weeks. That's that. Nine here, 10, 11, 12, 13. Let's go to the day and do this. This perspective is interesting because we took the 13-week high. This was last week's draw. Let's put it on the left. So we do have 13 close still left. To me, sounds like it has to be a shocker news. Most likely. Farthest down we go. Mm, this whole area just kind of weird. Okay. Votes. This is definitely neutral. Let's get the narrative context. Ugly range bound market to start the year. This is manipulation. Correlated market insight, if any. Hmm. Oops, it did something. Okay. Mm, mm. RTY, small caps, or just put RTY/IWM. Small caps seem to be holding higher prices better than the big three. Let's go to SPX. Mm. First, let's do the 13. 9, 13 here. We keep the daily on the 9. Okay, that's clean. Let's keep this. All right, that's better. Hmm. This is interesting here. think we got most of all of this. I really don't. I know December's low is logical. Previous week's low is logical. I don't really see way down here as a target. Hmm, it's neutral. Range bound January. Classic January. Heavily manipulated. Correlated market insights. Look at gold. Gold lost 1,000. Look at gold. This market is manipulated. So base hits. No long swings. Yeah. There's no third chart, even though I still like UJs. I'm not ready. Stay focused. 68%. Do I have a new theory or a model? No. Focus on trading less and trading within the range and 50 points. Study theme. Classic models. Week 1 is February 2nd through the 6th. That kind of works. Weekly open. Those elections are coming. Those elections are going to be important. Hold on. So I can adjust. There we go. Europe got their monetary policy. It's going to affect the dollar. We have NFP weak protocol. So trade Monday through Wednesday and take Thursday and Friday off. Take Friday for NFP off. COT. They got everything on the CME. Here we go. Here. Looks like commercials are closing a lot of long positions. So that's a bear sign. Still more short and long commercials. And they got all the open interest, so that's the most important. Okay. Let's put this over here. NASDAQ CFT. Commercials bearish, non-commercials bullish. Overall bullish tilt. Yeah. Active traders just give us commercials. The spread bias remains the same. Commercials bearish. Okay. Price dollar reversal, short-term top. Commercials were near the most net short they've been in months. Unusual commercial weakness. Possible early signal for a significant correction or reversal if NASDAQ price fails to advance further. This matches historical signals with extreme commercial net Shorts precede corrections. Highly bullish. Nasdaq often tops in February, March before spring corrections. Okay, let's just do this part. Pause. Use the bathroom. All right. Yeah, I need to do S&P 500. Okay. What stands out here? Look at the amount. Shorts they're closing. Commercials are closing. This is bullish time for the US. Mm, mm. Positioning is about even with 135 long versus 137 short. This is looking like chop. No one-sided expectation. I think I already got the Larry up. Okay. Market's technically flat overall, but with major internal imbalances. Non-commercials are bearish. Commercials are bearish. All professional money is bearish while retail are bullish. Okay. Heavily bearish, extremely bullish. This imbalance suggests consolidation or reversal, not breakout. Commercials are not adding to loans. And shorts increase. Large specs added. New shorts. Downside pressure. Okay. It's just bearish. Okay, let's do this. Boom. Let's shorten this up because these things get long. Calendar. COT. Alright, we on Fed watch. Next Fed meeting is the 18th of March, and we're looking at a no change. 1%, no change. NFL rate. So, Powell speech. Didn't move the needle. Okay. Coming earnings. Palantir, AMD, Google, Amazon, MSTR, MicroStrategies. Snap. I think that's as far as I'll go. Oh, Eli Lilly. I think Palantir is going to be a big deal Monday after hours. About 10. Yeah. I think you can move the market. Palantir might report earnings and just smack out everybody. Nah, the banks ain't gonna lose. AMD Tuesday, aftermarket, sentiment importance. Google Wednesday, top 10. Amazon Thursday, top 10. Wednesday, pre-market. A lot of eyes. This company too. It's a packed week. Sentiment is bullish. Bear sentiment actually decreased a little. And cash on the side remains the same. Okay. Let's get the 9 weeks of days. Mm-hmm. Okay. Big week, lots of news. Let's just wait for the higher time frame key levels. Reactions and target base hits. Anchor point interaction. Range bound market. So wait for the extremes and fade back to equilibrium. Range bound. Story to price alignment. New government shutdown. Earnings. AFP labor data. Engage. No, it should be defensive. Be defensive. The market environment. Okay, here. Now weeks of days. Ooh, this. Okay. This is interesting because all professionals in this market are bearish, and index still looks stronger than Nasdaq. Nasdaq looks more bearish, and let's wear large specs. Yeah, non-commercials really. All right, now on the same side, like SPX. All right, this is interesting. Professional bearish, and the index still looks stronger than Nasdaq. And the Nasdaq bearish and the non-commercials are on the same side, like in SPX. Boom. Yeah. That was not such a long sentence. Anchor point interaction. Range bound conditions. No solid anchor point. Story to price alignment. Earnings season is strong. Seasonality still lives. Got defend over here as well. That's just the regime. tickers, no third ticker. Scale focus. Habits, consistency. Journaling intent. Classic models. Case study plan. Case study hunt plan. Do you want to see more OTE? Buy and sell. And New York reversal daily profiles. Yeah. Bread and butter is in a peak. I don't know, it's day trade really. P week, the range bound market, reduce risk. This really should be Tuesday. It's in the P week. All right. I think that's that on that. All right, y'all. Y'all have a good day. Peace.